Let's now bring in Arias Asset Management CEO Carrie Firestone. Carrie, it's good to see you as always.
Thank you, Scott.
You have a tremendous amount of experience in this space, right? You used to run this area of funds for Fidelity. What do you make of this call right here?
So, Scott, I think it's very interesting. Of course, the biotech stocks have been clobbered outside of Amgen and Vertex. I think the small cap stocks on average are down 60% or more since February 3rd. And we know that Big Pharma desperately needs good new drugs that can't come up with enough for themselves, and biotech is the breeding ground for pharma for their ideas. And it costs $1 billion to bring a drug to market, and so biotech companies start them, and then the bigger guys come in and swipe them up and take them to fruition. So I think on the one hand it makes sense. We just saw Pfizer buy Biohaven for $14 billion, but that was a drug that was approved, a very good migraine drug. The advantage to a basket approach like buying the XBI, the BTK, the IBB is that you don't have to, as an individual or even as a portfolio manager, make a decision if you don't have the capability of what drug is going to work, because 1% of drugs that enter clinical trials, get to development. I mean, or maybe less than 1%. So, yeah, buying that basket approach is probably a good idea, but don't be fooled with the idea that if they have a stock price with cash more than that, that's the panacea, because companies rely on venture, on new stocks, on deals with pharma to have the money to operate, since they're not profitable. They don't, well, forget about profitable, they don't have any sales. So they need many years of cash. They need many years of cash in order to get somewhere.
That's why what Bryn said was so interesting to me as it relates to this conversation we're having. People want cash flow, not cash burn. I mean, let's be honest. You're describing an industry where, at least for many, there is big cash burn because of the desire to develop life-changing drugs. We totally get that. Give me your best name in this space right now that you like.
Yeah, well, I think of the large cap names, if you look at Vertex, which had a drop just recently because it's not a stock we own, but because of their diabetes drug, there were only 2 patients, or maybe perhaps 3, that had been dosed. One, it worked. That patient didn't need insulin, but the stock came down because the FDA said they needed more data, or they needed to slow down on the dosing. And that right here is, I think, attractively priced at the multiple. And then, if you're looking for something that's on the riskier side, Moderna. I mean, Moderna is a stock that has the platform mRNA. It's come down. I mean, it's one of the worst performing stocks over the last several months, but was the best performing stock, I think, in 2021 of the S&P. So those are 2 names on different sides of the spectrum that I think are interesting here. But again, I think a basket approach is probably a decent and sensible idea given the high risk. It's very high risk and high reward in this industry.